Hi everyone, it's Sunday, September 1st. Welcome to September. My name is Lee McMahon. I'm a currency strategist here at globalfxclub.com. Here today to do a quick weekend video for you guys, talk about a little bit about what we're looking at here in this upcoming, um, very busy, very active, very volatile, likely very volatile week that we have ahead of us. So now that we're finally, hopefully, out of the summer doldrums, we should start to see volatility pick up. And certainly there is plenty on the news front this week to help encourage that along. So before we start to talk about any of that, please take a moment to read over the risk disclaimer. It should now be on your screen, and then we'll get started. All right. All right, so let's go to the calendar here real quick and take a look at some of the chaos that we are likely to see this week. First, all right, so today we do have Aussie building approvals. Later tonight, that's really not a big deal. HSBC manufacturing PMI, again, we have the numbers over the weekend already, so less of a big deal. Tomorrow, though, all right, Spanish PMI, Italian PMI, British PMI. All right, so three big PMI numbers during the European session. Even though it is a U.S. and Canadian holiday, it's Labor Day here in the States. So markets will be a little bit quieter, especially after the European close. We still have plenty in the morning to keep us busy with those PMI prints that you definitely want to keep your eye out on. 9:30, so later that on Monday's Asian session, we have Aussie retail sales, a little bit more important. But the big news for the Australian dollar this week comes during Monday night, Tuesday morning, depending where you are. That is the RBA rate statement cash rate decision that they'll be releasing. All right, they'll keep rates unchanged at 2.5%, but the statement will be carefully parsed to see exactly whether or not we are looking to cut rates again in Australia. U.S. PMI, more UK PMI numbers, U.S. trade balance. Bank of Canada has a rate decision. Then Thursday, it all kicks into gear. All right, Bank of England, European Central Bank, Bank of Japan, monetary policy statement and press conference. And then Friday, we have manufacturing production out of the UK, and then U.S. and Canadian employment numbers. All right, non-farm payrolls. This is an NFP week. So, like I said, it's going to be crazy. Ton of stuff to pay attention to. So let's jump to the pairs real quick and go through exactly what we can be expecting to see. All right, so the euro sold off hard into last week. We are, however, sitting on some significant daily moving average support. We got below the 50, but we bounced nicely off the 100. 200 sits at 131.14. Those are all some significant support levels. We are, it appears, trading within a range here, though, on the euro. All right, basically between 134 and then 127 is the broader range. The smaller range for a while was about 132, but we kind of started to break down below that. All right, we didn't put a daily close though, so very possible that we do see the euro continue to push higher from here. All right, so keep that in mind. Watch for this range. Decisive break here below this 132 figure, and we could really start to see the pair move lower, down towards that 128 figure, especially if the European Central Bank comes out as dovish. Euro yen, all right, still trading very consistently, very tightly within this triangle. Watch that for a break. Eventually it's going to break, and when it does, it's going to be awesome. It'll likely, hopefully stay within that range until Thursday, so the ECB can be the one to break it out. If we do see a breakout before the ECB, it'll have to be suspect because we will have some significant data coming out. Dollar yen, similar story, continuing to trade very tightly within its triangle. It is unlikely that the dollar yen triangle is going to survive until Friday's NFP, but it might make it until the Bank of Japan or until some of the ISM numbers that we have out of the US. So look for a data breakout on dollar yen. Aussie yen, all right, pretty decent gap higher here on Aussie yen. Still, though, does look fairly bearish. 4-hour chart, all right, starting to roll over a little bit here. So keep your eye on Aussie yen to the downside. Pound dollar. Testing this trend line, retesting this trend line, all right, supported by the 200 period EMA here on the 4-hour chart, capped by the 50. Watch that range, and eventually I do still anticipate a pound rally for about 159. But a move back down towards 154.54, which is that 200 period EMA, certainly can't be ruled out. Dollar CAD, all right. You can see on the 4-hour chart kind of how dollar CAD is trading. It looks constructive here. This kind of looks like a 4-hour bull flag, but we are trading near some significant highs. Let me jump out to the weekly chart to give you a better idea. All right, so we are at a pretty significant and well-trodden resistance range. So a pullback down towards about 102, not out of the question. All right, that would continue to hold that upward sloping trend line, and we can start to see bounces from there. Aussie dollar. Another pair that gapped higher. I'm going to go to the hourly chart here on Aussie dollar. All right, so we gapped higher. We gapped into some light trend line resistance. If we can fill this gap, I'd like for longs around 89 for a possible breakout. I'm still looking at this pair as a significant breakout candidate, especially if we can clear first this trend line here, and then I will be looking for a break above 93, which is this resistance area up here. Looking for around 97. There's lots of divergence, lots of suggestions that Aussie is looking to break higher, but still needs to do it. And again, you saw the significant Aussie risk that we have later this week. Kiwi, right near 77. All right, very well-trod resistance area. Certainly a level that you want to keep your eye on. Okay, so keep that in mind on Kiwi. Let's might see a little bit of a bounce here. E-minis. Gapped up, all right, 1675 remains significant resistance. Watch this trend line here for support below 1625, and we may start to see some serious pain for bulls, that is. Bears will be delighted. Pound Swiss, all right, Pound Swiss best viewed here to me on the daily chart, approaching this 200-day EMA and this trend line, which is not perfect, but you can see it has been fairly consistent. That's at about 145. That is a significant resistance level. That being said, I'm still relatively bullish. I'm actually pretty bullish Pound Swiss. I'm also bullish Dollar Swiss. I'm looking for an entry on some sort of retracement down towards 92.50. Euro Aussie is just ugly up here. Pound Aussie is the same. I do still stand by my Pound Aussie is in an ascending wedge argument. All right, but I also said that these ascending wedges can wedge forever. So look for it to continue to wedge forever, but as soon as this lower trend line fails, it might be a good opportunity to start looking for shorts. Again, considering the significant UK and Aussie data we have this week, Pound Aussie is going to be even nuttier than usual. Could provide some of the best trading conditions of the year if that data all lines up, or it could just be a chop fest. But either way, definitely not a pair that you want to forget about this week. All right, I hope that's helpful. As always, if you have any questions, you can find me at globalfxclub.com or on Twitter at Duke0777. Look forward to hearing from you. Good luck trading this week, and enjoy what's left of your weekend. North Americans, enjoy your holiday on Monday, and I will talk to you soon.